Hello, I'm Christina Marujos, and you're watching the Daily Market Comment at xm.com by Rafi Boyajian. Optimism around a Phase 1 U.S.-China trade deal continued to boost risk appetite on Tuesday. A report by the Financial Times that President Trump is considering whether to remove tariffs on Chinese imports introduced in September raised hopes that the latest truce between the two economic powers will be a lasting one. The rollback of some tariffs by the U.S. appears to be a precondition for China to sign any trade agreement, so any resistance by the Trump administration could threaten the chances of a deal. Risk-sensitive currencies benefited from the improved market tone, with the Chinese yuan jumping to a three-month peak. Stocks also rallied, with all three main indices on Wall Street closing at record highs, and shares in Asia extended their recent strong gains today to reach multi-month highs. Equity futures for European and U.S. stock indices pointed to a continuation of the positive mood today. However, the safe haven yen and Swiss franc slid across the board. The U.S. dollar advanced for a third straight day against the yen to approach the 109 level. Gold was also on the way down as the precious metal was pressured by rising U.S. Treasury yields. The Australian dollar was one of the best performers today after the Reserve Bank of Australia held the cash rate steady as expected. The RBA has slashed rates 3 times this year, and although it kept the door open for further cuts if needed, markets are divided about whether more policy easing is on the way in the absence of any explicit signals. The New Zealand dollar is also rebounding from multi-year lows, despite the possibility of the Reserve Bank of New Zealand cutting rates next week. Employment numbers out of New Zealand at 9:45 GMT could determine which way the RBNZ will decide. Before that, though, the ISM non-manufacturing PMI will be watched out of the United States for another indication on the health of the economy following Friday's better-than-anticipated jobs report. A solid ISM print could reinforce expectations that the Federal Reserve is on pause for the foreseeable future. This was today's Daily Market Comment at xm.com.